If you are interested in investing on Esketit or planning to increase your investment amount this year, this video is for you. Today, we will go over the biggest changes that you need to be aware of as they will affect your earnings and the risks on the platform. We will be talking about the situation in Gaza and the impact on the lending business in Jordan, as well as the plans for the Avafin Group in 2024. We will also break down the investments in loans backed by music royalties or investments in defaulted loans from Spain. To improve the quality of our reporting, we had a 90-minute discussion with the CEO to gather first-hand information. This video will just cover the key takeaways from our interview. The members on P2P Empire can watch the full interview in the link in the description below. So let's get right into it. 2023 was an eventful year for many platforms. The number of geopolitical conflicts grew last year, constantly testing the risk management of various lending businesses. With the recent escalation in Gaza, many investors on Esketit pulled out from their investments in Jordan, which is only 200 kilometers away from the war zone. Esketit was quick to inform investors that there has not been an impact on the lending portfolio and that as of right now, no additional risks are likely to materialize. As critically thinking investors, we should, however, always evaluate the situation based on the available information. Relying solely on the publication from P2P lending platforms is typically not the best idea. While Esketit has not had to deal with any issues regarding this conflict, the CEO confirmed that some of the repayments of borrowers employed by the military in Jordan were delayed in the first few days as the conflict escalated.
In the first days after the conflict, we saw that the repayments of military and police people taking loans from us were a bit worse, just because most probably they were focused on the work.
Since there have been many military conflicts in the Middle East, historically, you should know how a potential expansion of the ongoing war into Jordan would affect your investments. Investors have a lot of experience now with investing in regions which turn into a war zone, like we have seen in Ukraine. And investors know what happened then. A lot of the funds were locked, from some were already repaid, some still are pending. What would happen in the case where the conflict in Gaza would expand beyond the regions that now it's in?
Yeah, of course, it's an understandable question. And here, of course, I wouldn't be lying. Most probably, if there would be war in Jordan, most probably, or not even most probably, but for sure, things would be also affecting the loans and their payments. And if that would be affecting that also, most probably it would be affecting also our investors. And then they would see some repayments not being done and all that. And most probably we would need to also turn on some pending payments functionality on our platform and things like that. But yeah, all this is currently highly unlikely, but of course at the same time I wouldn't be lying that in such situations it would be possible to continue to repay loans in the manner as it is happening currently for the last 3 years when Jordan is on our platform and everything is good and all the risks are manageable. But of course, war is always a force majeure in a way in most of the agreements.
So basically, if the war expands into Jordan, the risks obviously increases. If we were to compare the performance of some of the loans in Ukraine since the war started, we would likely conclude that some lenders managed to recover a portion of their loan books even during a war. In the case of Ukraine, this money cannot be legally sent out of the country and returned to investors until the war ends. This could be also a potential outcome for any other portfolios in countries involved in wars. You should know that loans in Jordan are not backed by any group guarantee, so there won't be any lenders from other countries stepping in and repaying the loans like it was the case on Peerberry. Despite the somewhat higher risk levels, the lending company in Jordan is performing well. The CEO told me that soon they will be able to share the financials with the community, confirming the strong position of the lender. And as you might know, as with any established lender, money for finance in Jordan will also be lowering the interest rates in the near future after the financial results are published. Outside of potentially higher geopolitical risks, the payment morale from borrowers in Jordan exceeds the payments in many European markets. This may also be another reason why the company is interested in decreasing its funding costs. Now let's talk about Cream Finance, which rebranded to Avafin. This lending group was founded by the same founders as Esketit and was the first lender to list loans on the platform. Avafin is a well-established player in the lending industry, offering group and buyback guarantees on all the listed loans. Currently, around 36% of the outstanding portfolio on Esketit are Avafin loans. As soon as the financials from 2023 are audited, you can review the annual reports which will be published on Esketit's blog. For many investors on Esketit, Avafin offers some of the best risk-adjusted returns. The CEO told me that investors will soon also be able to invest in new loans from Mexico.
Maybe in the nearest months we could add their loans from Mexico. So they're putting a lot of effort in growing their portfolio.
The new investment opportunities from Avafin will likely not be able to cover the demand from investors experiencing cash drag, which is why Esketit is constantly looking for new business. Recently, the platform announced that investors can now invest in loans backed by music royalties. This is a new product in the P2P lending industry, typically dominated by payday loan lenders and real estate developers. So let's break down this new investment to figure out how the systems work and whether it's something you should even consider as an investment. This is a rather complex setup, so bear with me as I will aim to explain it to you. It all starts with a music artist who creates songs. This person uses distributors such as Utopia to distribute the music to platforms like Spotify, iTunes, or YouTube Music. Those platforms generate revenue from their users. The royalties are then collected by a specific company and paid out via Utopia. That's one way an artist can make money. Utopia, the music distributor, realized that some artists need money to cover their expenses before receiving the royalties. To bridge this gap, they started offering cash advances. The artist takes a loan for a 20% effective interest rate, which is being repaid by the future income made from royalties. Since Utopia has access to all the data and controls the royalty payouts, it can easily predict the future income that backs the loan. So first, the royalties cover the cash advance and then the rest goes back to the artist. This lending model has been a great success for Utopia with a historical low default rate of less than 1.5%. Until now, Utopia or its subsidiary Lyrics, which is the entity issuing cash advances, has funded the loans from its balance sheet or specific funds. As the lending business grows, the company is looking for new funding sources, which is where Esketit investors come in. In collaboration with i2 Group, Esketit has created an SPV in Liechtenstein, which Utopia owns. This company serves as an additional layer of security for investors. So the royalty payments don't go directly to Lyrics or Utopia, but through this SPV, which returns the funds to investors. Only the leftover royalties are then transferred to Utopia and the artists. Since Esketit plans to fund 2 to 3 million euros worth of cash advances from Utopia in the upcoming months, you should be aware of how the system works. It's also worth noting that the cash advances will be offered with a 12-month period and a 9% interest rate. Those investments will be backed by a 90-day buyback guarantee offered by the SPV. There are some more risk-related nuances that you can learn about in the full interview. Outside of the new loans from Utopia, Esketit also introduced investments into defaulted consumer loans in Spain. Suppose you have some experience in the lending business. In that case, you likely know that lending companies are selling bad portfolios that they cannot recover in a specific period to third parties at a discount. Usually, this discount is priced into the interest rate, so it doesn't affect the lending business. Now, those third parties who purchase the discounted bad portfolio have the time to recover it. In Spain, on average, it takes 2 years to recover the entire principal from a bad portfolio. Lending companies don't have the time to deal with the hard debt collection, which is why they prefer to sell it with a significant discount. The buyer has the time to recover the portfolio. Usually, company outsources the debt collection to debt collection agencies, which do the work for that. Since those agencies work for a success fee, it's a fairly good business for the buyer who buys the portfolio at a much lower cost. To buy the bad portfolio, the company, in this case Spanda Capital, which will be listing loans on Esketit, is looking to raise the necessary funds. Investors will earn 12% annually, receiving only the interest payouts during the first 6 months. Afterwards, the principal will be partially repaid until the end of the loan term, which is 24 months. According to the CEO, it's expected that Esketit will raise 5 million euro for Spanda Capital this year. So as you can see, the loan volumes will continue to grow on Esketit, which should lower the cash drag for some investors. If you're interested in the newly introduced products, top up your account and activate the diversified strategy which increases the liquidity of your investments. The CEO also told me that there will be a small revamp of some of the platform's design elements. Esketit also plans to disable the stablecoin features in the near future as they create challenges for opening bank accounts. So those are some of the upcoming changes that you can expect. As you can see, the platform will offer an even bigger variety of loans. Despite Esketit being a top-performing P2P lending marketplace, it's essential not to invest without a clear understanding of the new offers. Take the time to comprehend the associated risks and familiarize yourself with the varying terms and conditions, which can differ from one loan to another. This video scratches just the surface of our discussion with the CEO. If you would like to get more details on the setup and securities of the newly introduced loan types, I suggest you watch the full interview. Esketit will certainly be around for a while, so if you're interested in earning interest by investing in vetted loans, consider using our link in our Esketit review to get yourself a 0.5% investment bonus on your invested amount during the first 3 months from your registration. As always, if there are any new developments on Esketit, we will inform you in our newsfeed or in our monthly performance update. If you don't want to miss out on those, make sure you subscribe. If you found this very helpful, give it a thumbs up. Thanks for watching, and I'll catch you in the next one.